Hello everybody, Drew Brenner, your mortgage advisor here, and I've recently had several realtors ask me about that new 3% down conventional product that Fannie Mae came out with a couple of months ago, and so I wanted to do a short video about it. This will be slightly longer than my regular 1-minute videos, but shouldn't be more than 2 or 2.5 minutes. So let's jump right in because I think this will be something you'll definitely be interested in hearing. So yes, Fannie Mae does now allow you to put only 3% down and get a conventional loan, which is less than the 3.5% minimum that FHA has. Now there are definitely some stipulations about that. So a big main one is you have to be a first-time home buyer. However, they've redefined a little bit of what a first-time home buyer is. So the standard definition is someone that has not had any ownership in a home in the last 3 years, and that's still the case. However, if the only home that you've owned in the last 3 years is one with an ex-spouse, so you've gotten a divorce and the only home that you've owned is that one with the ex-spouse, then you would still be considered a first-time homebuyer. So this program is really good for those that maybe just got out of a divorce, don't have a whole lot of money to put down. This would be a good product for them. So and the next really great stipulation about it is that you can go all the way down to a 620 credit score. Now, for those that don't know, if you're putting less than 20% down, so you have mortgage insurance, you've got to have at least a 660 credit score for most people. Well, this kind of does away with that. At least if you're doing just this 3% down option, you can go all the way down to that 620 credit score. If you're putting down more than that, strangely enough, you then have to have a 660 credit score. So it's a little weird, but it does allow you to go down to 620. Now, as some of you probably know, Fannie Mae about a year or so ago started allowing gifts on a conventional loan, and you don't have to have 5% or some amount of your own money. You can get it all in a gift, and that's still the case with this product. However, if your credit score is below 660, then you cannot use a gift. So in order to use a gift, you have to have it above a 660 credit score, but if you're not using a gift, you can go all the way down to 620. Now, a negative about this, if you will, is the interest rate will be slightly higher. I don't have any specific figures for you, but it'll just be a little bit higher, not too much, compared to if you were putting 5% or more down. Now, one big kicker about this loan is that it does have higher mortgage insurance. So, as many of you know, the FHA lowered their mortgage insurance back in January from 1.35 down to 0.85%. Well, this conventional 3% down product is at 1.31, so it's almost the same as what FHA was back before the end of January. Now, just to give you a couple figures, on a $100,000 home, you're looking at paying about $36 more a month in mortgage insurance as compared to FHA, which is about $106 a month in mortgage insurance total. On a $200,000 loan, you're looking at paying about $212 a month in mortgage insurance, which is about $73 more than if you were going FHA. However, unlike FHA, it's still a conventional product, so that means the mortgage insurance will go away when you pay that loan balance down to 78%, whereas with FHA, it'll never go away if you're putting that minimum down. So you get that benefit there. So the positives are you can only put 3% down, you can go all the way down to a 620 credit score, and if you've recently gotten out of a divorce, you would still be considered a first-time home buyer if that's the only home that you own. Some of the negatives are the interest rate's a little bit higher, and the mortgage insurance is definitely going to be higher. So there's definitely positives and negatives. So if you have a buyer that might be interested in this program, please give them my information. I would love to talk to them. My number is 214-282-6387. Again, this is Drew Brenner, your mortgage advisor, and please call me with any questions or any buyers you've got. Have a great day.